Number one, the average American works the first 4 months out of the year just to pay taxes. So that means the first 4 months of the year that you work, poof, gone before you collect a single dollar. Number two, the average real estate investor overpays the IRS by thousands of dollars every year just because they do not understand a few simple tax rules. So if you own a single family or multifamily or commercial property, watch this video. It's going to save you thousands of dollars right now. So in this video, I'm going to go over with you 6 legal tax hacks that you can incorporate today, okay? These tax hacks are year-round and especially year-end. Now, you're going to learn how to keep more cash flow out of your property. Again, whether you have a single family, multifamily, or commercial property, you're going to pay less in taxes. And most importantly, you're not going to work the first 4 months to pay Uncle Sam. Let's get started. All right, let's start right here with the real problem and why this matters. When you own a rental property or about to own one, the IRS sees you as more than just a landlord. They see you as a business owner, okay? And a business owner, we get huge tax benefits. We can deduct expenses, we can depreciate the building, and we can get bonus depreciation. All of this equals paper losses on our tax filing, meaning that the paper losses can reduce the amount of taxes that you pay on your property and even on your job if done well. Here's the problem. The problem is most real estate investors don't track, the word is track, properly their expenses, okay? Next, they don't time their purchases to maximize the tax write-offs. And lastly, most investors either don't ask the right questions to their tax pro, their tax expert, or you don't talk to them until it's too late. Let's fix that. Got questions? Simply text the word Peter to 833-942-4516 and we'll help you. Hack number one is boring but very powerful. Look at this. Hack number one is to track every legitimate expense, okay? Because every property has an income and expense side, every rental property. On the income side, it's easy to track. That's just money coming in. You keep really good track of that, right? Okay, one thing that beginners fail to do is keep track of all the expenses. I'm talking any type of repair, maintenance, utilities. Okay, so electrical, gas, garbage, whatever. You can also write off if you have utility expense during a vacancy. Don't forget that, okay? Property taxes, insurance, travel, tax preparation, seminars to educate you on being a better investor, even your home office. Do you get the picture? I'm keeping track of everything that's related to my property, okay, to that rental property, everything. Now, here's some rules. To have, you can create a simple system. You need to document each of the expense or the IRS will happily ignore them. Okay, you got to have receipts, you got to have invoices. It has to be written down. Okay, you can use a simple spreadsheet to keep track of this because at the end of the year, your tax preparer is going to ask for the expenses. So if you don't do this throughout the year, you're going to forget what expenses you had in July for year-end tax prep. So use a simple spreadsheet so you can capture every single dollar here. Here's why. Because every $1,000 that you capture, okay, additionally is $1,000 less you get taxed on. Okay, now here's the key. If, let's say, for example, you are in the 24% tax bracket and you just found another $1,000 of expenses you can write off, you just saved yourself $240. If you can find additional $5,000 over the year, you have a larger property, you just saved yourself $1,200. If you can find another $10,000 from seminars, programs, home office, $10,000 found, you saved yourself $2,400. Do you see how every single dollar matters when you're dealing with your rental property? Got it? All right. That's hack number one. is to track every legitimate expense. Let's go to hack number 2. Here we are with hack number 2. If your tax preparer, your CPA, your accountant is not using hack number 2 on your investment property, that person or that company needs to be fired. Okay, here's why. Okay, hack number 2 is depreciation. It's your biggest invisible tax write-off. I call this the phantom cash flow of real estate. This is where commercial and any type of real estate really shines. This is where we can save tens of thousands of dollars on taxes just by owning the real estate. Okay, it's huge. This is how the rich do not pay taxes. Okay, all right. So when you think about depreciation, here's what the IRS says. The IRS says, Peter, we know that your building wears out over time. So we'll let you deduct a little bit of its value every year. Incredible, right? This is all legal. Let me give you a quick example how this works and the profound effect that depreciation has on the property. Let's say we have a 5-unit apartment building and you paid $1 million for it. Okay, now the buildings is going to be separated with the land and the land and the building, the property for tax purposes. Let's say the land is worth 200,000 out of this million, and the building is worth 800,000 out of this million. Okay, so the million is adding up here. All right, so the IRS allows you to deduct, depreciate the building over 27 and a half years. So what you do, here's the math. You take $800,000, get the value of the building, and you divide it by 27 and a half years. That comes out to be $29,000 in immediate tax year 1 tax write-offs every single year. Okay, that's huge. Why is it huge? Let me go even further. Let's say that this 5-unit property gave you a cash flow of $10,000 in a year. Okay, so you pocketed $10,000. Okay, it's in your pocket, in the bank, $10,000. When you have a $29,000 write-off, on paper is going to look like you had a loss. So IRS will see the $10,000 that you made, and then they'll see the loss of minus $29,000. So on paper, you made negative $19,000 on paper. Okay, this is the beauty of real estate, especially commercial real estate and multifamily. These deductions are huge. That means for the year on paper, when you submit your tax returns, it's going to show for that property negative $19,000 for the year, even though you pocketed it in your bank, you have $10,000. Okay, you can then take this negative $19,000 and apply it to another property. You can apply it to selling a stock. You can apply it to reducing the taxes you pay at your job. Got it? That's how important this is. So again, if your tax preparer is not using this, you should say bye-bye. All right, that's tax hack number 2. Let's go to number 3. Every successful commercial real estate investor has a mentor. Get mentored by me and my team by applying to be our next protege. Click the top corner. I'm spending time on each tax hack as a purpose, and the purpose is to help you save money every single year if you just own one property. Okay, so tax hack number 3 is the end of year timing. Okay, what I mean by that is I call this pull forward deductible spending. All right, so basically you can time your spending on the property to reduce this year's taxes. Here's an example. Let's say you pay your insurance early. Okay, rather than pay it in July and then wait until the following year, pay it all in that same year to get the tax write-offs. You can do repairs you've been putting off. Okay, get it done this year. Okay, next you can buy supplies and parts on Black Friday. So get a great deal on Black Friday, even though you may not do the work and need it until next year. Okay, so let's say that you pay your taxes early, you do your repairs, and you buy your supplies on Black Friday, and let's say you're at a 24% tax bracket. Okay, let's say everything that you did you end up spending $3,000 on all these things that improve the property. Okay, guess what? At a 24% tax bracket, and you spent an extra 3,000, you saved yourself $724 in taxes that year by doing the necessary things that you spend on your property. We're not wasting money; we're spending money to reduce taxes. Got it? All right. Everyone, that was tax hack number 3. Let's go to number 4. Hack number 4 is never understood by beginning investors. I'm going to break it down for you and why this is important. It can save you thousands of dollars. Okay, so hack number 4 is to separate repairs versus improvements. And a lot of beginners don't understand the difference between what a repair is and what an improvement is. You can write this off now, and this you have to write off over 5, 10, 15 years. Okay, a repair you can expense right now. Okay, you can expense this tax year. An improvement you have to capitalize and depreciate. Okay, so what are repairs or what are improvements? Repairs are, let's say you replace a broken window, okay, or you patch up a hole, okay, or you put a new shingle on a roof or something. You're a roof patch, okay. That is a repair, and you can deduct that this year, okay. An improvement is if you put an entire new roof on, if you buy a new appliance like an air conditioner, if you renovate your kitchen in your bathroom or the living room or inside your unit, that's an improvement to the property, and you have to depreciate that over time, 5, 10, 15, 20 years. Okay. Now, why is this important? Why does this matter? Because I want you to get this, okay? Because a lot of beginners don't realize this because they have their contractors do work for them, and if you just make this one small improvement, you can write off a whole lot more this year. Okay, so many small repairs can be separately invoiced and expensed now. Okay, versus bundling the entire big job together, and if you do that, if you have a giant job, you have to depreciate it. Okay, so if you have a bunch, if you give your property manager, your contractor, I want you to do these 10 things to my property. Okay, and he says, okay, it's going to cost you $5,000, and he does it all. Okay, you just told him what to do. Okay, and you paid him $5,000. You have to what? Depreciate that over time. That's an improvement. But if you can break down individually each task, what he does one by one, and invoice them one by one, it still equals $5,000. Guess what you can do? That will be a repair in most cases, and you can deduct it this year. Got it? So the key here is to understand what a repair is, what an improvement is, and separate them so you can maximize what you can write off this year. Got it? All right, hope you understood that. All right, that was hack number 4. Let's go to hack number 5. Ever wondered how pro investors find and analyze deals for maximum profit? How to secure financing even if you're a beginner? Or attract and keep tenants for steady passive income? Commercial Real Estate for Beginners delivers simple, actionable steps to master it all. Tap the link on the top corner for your free copy today. Tax hack number 5 is rarely claimed by beginners, okay, and that is mileage, travel, and education. Okay, beginners rarely claim this because they simply don't know or don't know how. Here's what you do. All right, for mileage and local travel, let's say you own, again, single family rental. Okay, fourplex, 5 unit, commercial property, doesn't matter. It has to be an investment property. When you visit the property, when you drive to Home Depot, when you go to the bank, okay, and even if you meet a contractor, all of this you can write off, okay, all of this, most of it, okay. Need to talk to your tax person, but Everlance or Stride app, okay, these are 2 apps that are IRS compliant. These are 2 apps that are, I think Stripe is free. You can just download it, and it'll keep track of all your expenses. So the year end, you have a log of everything. Okay, it's very simple to use. Next, you can write off your travel out of town. Let's say that you live in California and your property is in Texas. You can write off your flight, your hotel, your rental car, but you have to document everything. Because remember, if it's not documented, the IRS doesn't have to approve it. Okay? So you need to keep receipts and keep notes that you went here for the primary purpose of visiting the property and engaging in your rental business. Okay? It's important. Next, this is an important one. You can write off also education and coaching. So our students who sign up for our coaching, they can write that expense off, okay, for as a tax write-off if they own a property. Okay, so books, courses, consulting, coaching, all of that, you need to keep a log of and keep receipts because at the end of the year, you can reduce your tax liability by writing off all of this, okay? So you can learn to earn, I would say. Got it? All right. That's tax hack number 5. Let's go to tax hack number 6. Last but not least, here is tax hack number 6, and it is to talk to a real estate CPA before December 31st. Okay? Now, real estate CPA is a CPA that focuses on real estate taxation, not a CPA that does audits for companies or that's a management consultant or that does forensics. No, you want a real estate CPA that understands real estate taxation. Okay, make sure that is their focus. If not, you are hiring the wrong person. Okay, so because you hiring the right person, this could be your highest ROI, return on investment move that you can do right now. Okay, so here's what I want you to do. Just get 30 minutes of their time, okay? And you're going to ask 4 good questions. These answers to these questions will tell you if they know their stuff or not. Okay, very easy questions. You can just copy these down and email it to them. Okay, or have it ready for your meeting. Question number one is, am I using all my rental property deductions I qualify for? Number 2, what can I do before year end? Okay, number 3, am I set up with the correct entity where I can maximize my tax deductions, okay, for my property? And number 4, should I consider a cost segregation study? I had a student who asked his CPA, should he consider a cost segregation study? And his CPA said, what is that, right? So that person should be fired, okay? All right, next, here's why this matters. Because your job is not to be a tax expert, okay? It's not. Your job is to know the basics you just learned and to keep good records for your tax accountant, okay? And then hire a tax pro who knows real estate. This is why this matters, okay? This will save you thousands of dollars that you didn't even know you qualified for because you hired the right person, a CPA or accountant who focuses on real estate and taxation. Got it? All right. Thank you so much for watching this video. I hope you learned a lot, okay, on these tax hacks. They're easy to implement. All you have to do is make sure that you document everything. So thank you so much. If you like this video, go ahead and click the like button. If you want to get more videos like this, go ahead and subscribe and we'll push them your way. But other than that, I wish you a very good day and I'll see you at the next video. Would you like to work with me? Every successful commercial real estate investor has a mentor. Learn more about my Protégé program right here.